Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at MLC, and I'm joined by our Senior Economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, it was a strong performance for global markets in June after a disappointing May. What was the reasons behind that?
Well, there were two primary factors that were driving the share market higher. Firstly, the American and European Central Bank indicated that they were prepared to cut interest rates over coming months, so that was seen as a key positive. And there was also hopes for a resolution of the trade dispute between America and China because President Trump and President Jinping from China were going to meet at the end of June in Osaka in Japan.
The other key event that we've seen in markets in recent weeks is that the Reserve Bank of Australia have cut rates for the second time. Does the Australian economy really warrant that kind of level of cuts?
Yes, it does. So when we look at economic activity, so if we focused on, say, car sales, retail spending, housing construction, what we can see is the economy is weak in terms of those indicators. So from the Reserve Bank's point of view, they can see the need to cut interest rates, even though it does penalise savers, but it does help borrowers. So in this environment, a little bit more or a little bit lower interest rate for borrowers is quite helpful for the economy.
And what about the US? Their share market's at all-time highs, unemployment is low, and yet we're talking about rate cuts there as well. What's the reason behind that?
Yes, it's quite a remarkable performance that we're seeing out of Wall Street. So Wall Street was up 7% for June itself. And that's surprising considering that if you looked at what's coming out of the central bank, that concerns about the global economy, the downside risks, the muted inflation story, that would normally indicate a weak corporate profit story. However, Wall Street is more running on the low interest rate view, and with that will extend the US economy's growth phase. So from that point of view, it's seen as a key positive.
And we're seeing that bond yields are moving lower on the back of these rate cuts and potential further rate cuts coming. Where is this all going to lead?
Well, for now, it is seeing a strong global share market. But we do have some concerns about the trade issue, that despite the talk about negotiations and a truce between America and China in terms of raising tariffs, that issue is still alive. So until President Trump gives up on his agenda to raise tariffs, we need to be conscious that there's still downside risks to the global economy and therefore corporate profits. So we need to be a bit conservative and a bit prudent about the risks in the global economy at this point in time.
What about the Australian market? We saw the Australian share market up 3.5% in June. What's the outlook there?
Well, for now, because the Reserve Bank's been cutting interest rates, because we've had very strong commodity prices, so if you saw iron ore was up 8% in June, you saw a similar move in the gold price. So that's seen as a key positive for the Australian share market. But then we come back to the weak economic activity data in Australia. So at some point in time, the corporate profit story in Australia will come under pressure, and with that, the upside risk to the Australian share market is going to be limited.
Thanks for your time, Bob.
Thank you, Sinead.
And thank you for joining us.